Alrighty, it is Tuesday, June 25th. Another day of trading is wrapped up and is in the books. So let's get right into it. So first we're going to start with what the plan was, the positions I have on, any new trades that were placed, the plan for tomorrow, and then also kind of a cool, fun little segment that I thought of. We'll get into that one here later on this video. So let's start with what the plan was for today. So we'll start with Dow Jones. I had said yesterday that it looks good, but the problem with starting any positions here is you're starting it right into resistance. So today was a down day, kind of how I thought it would be, really. You know, I didn't really have many expectations, but the probability of this continuing higher was less than the probability of it going lower. So I wasn't going to go long Dow today. Could be totally a completely different story tomorrow, but we can get into that later for what the plan is for tomorrow. Let's jump over to SPY. You guys recall, I didn't have any opinion on what would happen with the S&P 500, so didn't do anything with it. Russell 2000, my opinion on this was that it was a laggard, and I wouldn't go for it. And although the risk to reward was good right here, if you were going to go for it, that would be the only argument as to why you would. In my opinion, why I would is because the risk to reward was pretty good right there. But it's a laggard, so until it's proven otherwise, I'm not going to go long in it. NASDAQ. NASDAQ was the only one I thought there would be a trade to be made. I had said this gap had been closed, and we'll see for the morning. Also, I think the camera is covering this right here, but on the 4-hour chart, the RSI is down around 30. So in bull markets, especially in indexes, I like to buy what I could kind of classify as oversold. That's typically when the RSI is getting below 40, especially on a 4-hour chart. You can do it on an hour chart, but I've had more success with the 4-hour charts because here, you can clearly see here. If you just use the hour chart, you're like, dang, this thing's oversold. You would be sweating all down here, So, that was it for the plans. And now let's go over what was executed. So what was executed was calls in the triple Qs. Now, for anyone who doesn't know what I would consider the triple Qs or TQs. I've never heard anyone else call it that, but whatever. TQs would be a 3x leveraged NASDAQ ETF. Went long right here, 640, 630, yeah. And this is Pacific time, so this is right as market's opening. So let's go over this trade. There was mistakes that were made on this one, so buckle up. So go over to the triple Qs right at market open, or the TQs, because I guess the triple Qs is just the regular NASDAQ ETF that everyone uses, but call it the Qs, triple Qs. All right, here we go. So over to the TQs. Place the trade like right here, basically right after the market had opened. Calls get filled. So I go over to my positions. I'm looking at the positions and the amount of money that, like in terms of like nominal value, the dollar amount is increasing substantially more than I've thought made any sense. So I'm trying to figure it out. Like, this makes no sense. What's going on? Am I all tired and groggy? This math, it doesn't add up. Well, anyways, what had happened is I bought substantially more calls than I normally ever would, especially on a starting position, like a substantial amount. And so that was a mistake. So then I think, all right, this position size is way too large for me to handle emotionally without making a mistake. And it was a mistake, so I think, all right, how am I going to rectify this mistake? What am I going to do? So then my plan was, on a 5-minute chart, which is what we're on now, was when it starts to get into, overbought, quote unquote, territory, then I would get out. Not all of them, of course, just back to a normal position size. So that's what I did. I got out right here, right at 70, right here. I got out of, most of them. Still have the normal position size. The calls got filled at $6. So the calls. Expiring August 16, $72 strike price. That is, how many days to expiration? I don't know, 50? 52. 52, so anyways, got filled at 6. Got out of the majority of them back to the normal position size at 625. So that was a gain of 4% on those. So that mistake worked out, right? But regardless, it's still a mistake. And, I kind of, yeah, sure, that worked out. That was great. It was a good day, right? In terms of the P&L. But for example, I mean, if let's say, for example, you're, football team and if you fumble the ball and your teammate picks it up and scores a touchdown, it's still a mistake regardless, right? I mean, you're not going to win championships by fumbling the ball constantly. So just because that one play turned out to be good and you guys got a touchdown doesn't mean next time you're gonna be like, all right, I'm just gonna throw the ball randomly and see what happens. So that's not a way to win a championship. So it's a mistake. Those mistakes have got to be mitigated at all cost. The only thing I care about is trading mistake free. That's the goal. Always the goal. You have a strategy, you have a plan, you trade your plan, you trade the strategy, you trade the probabilities, and the money comes as a result. I don't focus on the money, and there's ways to make it so you don't focus on the money, one of those being position sizing. So all I would be doing all day is focusing on the money, so I'd screw it up. So anyways, so we get out of that, $6 to $6.25 is a 4% gain. Down to normal position sizing. Those calls ended the day. Good close. Good strong day in NASDAQ. I didn't necessarily think that it would be a very strong day, but it doesn't really surprise me. But I wasn't going in today thinking NASDAQ's going to be ripping. Those calls ended the day $6.70. Again, 52 days to expiration. So those are performing well. That was the first trade. Okay. Next, we'll go into positions that I've done nothing with. Emerging markets. Already explained why we got into this one, what attracted me to it. Still in it. Yeah, still in it. This is the thing with options, right? Where up here, between here and here, is a significant percentage decrease. So, I mean, it looks like nothing on this chart. But in terms of percentage, lost from this point, it's pretty great. So that's why I personally like longer dated call options or longer dated options in general. So that way you don't have to deal with that amount of volatility. And don't try and focus on the money, right? I mean, is any sell rules broken? No. So, what do I care? No sell rules broken. Who cares? Those August 16, expiring August 16, those are $42 strike price. Still think that's a good strike price. Calls got filled, $1.30. These are now trading at $1.45. Still think there's room to run. And moving on. Goldman Sachs. Yesterday, I had thought that this was the best looking, strongest looking stock, and I still do. I still think it's amazing. But of course, it had a down day, which, who cares? Stocks have up days and down days. Down 1%. Average cost basis, $459.13. Currently trading right there. Down a couple bucks. Alrighty. No sell rules broken. No big deal. Again, that was just a starter position. I really, and that's just an equity position, by the way. Really looking for an opportunity to go long some calls here. And I mean, this could be pretty sweet coming up here. Yeah. So we'll see. We'll see about tomorrow. I might go long some calls. Goldman Sachs. But I may not. And we'll kind of go over that later, what I might do instead. I honestly, I don't really like going long individual stocks, but I do. But the vast majority of my portfolio or any positioning is in the indexes. Maybe at the most, maybe 50%, maybe 40% actually of my position size are in individual names. The vast majority is in indexes. And again, that's just because that works for me. And, don't got to worry about individual stocks. And you can still significantly outperform markets with not as much risk as individual stocks. So, moving on, this is going to be a new trade place today. Robinhood. All right, let's go over why. First of all, this base is massive. Massive. This is a 2-year base. I would say it's a 2-year base. Yep. February of 22 to when it broke out of here, somewhere around here. Let's just say there. February 24th. And as the saying goes, the longer the base, the higher in space. Why? am I in this? Well, I just kind of mentioned some reasons. Another reason is revenues are increasing. I don't know about users increase. That's something I should look up. I just thought about that. But I guess if revenues are increasing, you'd think users are increasing as well, although, they'll get paid by, volume sizes as well. So, anyways, I also saw an article that had said, that like more Americans are invested in stocks now than ever. And companies like Robinhood are going to benefit from that. I would guess more than like Fidelity or Charles Schwab or something, because, with Robinhood, it's easier. It appears easier to get started. I don't know if any of this is true today, but this is how it was back when they started. You could just trade options right away, which is cool. I think that's sweet. What do I care? But I think you could just trade options right away. They have crypto on there. Again, I don't know if they still do. I really have no clue. But I think that they do. So I would think that with all the new people coming on board, a lot of them would end up at Robinhood. So those are some of the fundamental reasons. Revenues increasing, I think I said that. Now let's look at the chart. Okay, we talked about the massive base. Now let's look at a pattern. Now what pattern is this? Here you've got a little cup and handle. It's kind of a short one though, huh? Middle of March. Oh wait. Nope. April. Short one, whatever. Who cares? The stocks, it's uptrending. 50-day moving average is moving up. 200-day moving average is moving up. You have the shorter time frame moving averages converging here. On this pullback here, you'll notice a significant drop off in volume. That's always good, and that's what you want to look for on any pullback. It's just a drop in volume. You don't want to see that volume picking up. If this thing gains momentum, it's got serious room to run. If it gets over 25, it could go right around 28. So again, that's plenty of room to run. So now let's look at what my process is for how I place this trade. So I'm thinking, all right, so I'm going to go long Robinhood today. What do I do? We'll go to a shorter time frame chart here. So I had missed this whole run up this morning. So you see this run up, I put my alert here. This is kind of right around where I wanted to buy in an ideal setting, Continues higher. Don't chase. Don't buy here. Don't chase. Next time it came back here, I want to buy. I just made the decision. We're going for it here. Those calls got filled. Oh, I have an equity position in it as well. So the cost base is $22.07. Is the equity position. The options position. Before I tell you about that, let's continue on with the strategy here. And that'll explain the call options that I chose. Okay, so then I look, is this particular chart pattern, has it happened before? And if so, what happened to the price? Okay, so you look at this, does this look similar anywhere else on here? Yeah, it does. Looks super similar to right here. What happened right around here? It went down. Okay. So then we're gonna go, a shorter time frame. Is there anything that looked different on that day versus today? Not really. I mean, it looks like pretty identical. I mean, it looks pretty identical to today, right? Green line, very identical. So then you think, okay, so how can I mitigate, if I'm wrong, how do I mitigate all of this time decay in an options contract here? Because this is going over a span of a month or something. Or 3 weeks, I don't know. So significant amount of time, massive time decay, you're losing all sorts of money. Two ways that, I would think, I'm sure there's plenty more, but two ways that are pretty easy. One, if it starts rolling over, just get out. Two, get a longer dated in the money call option than normal. So that'll mitigate a lot of the downside volatility. Okay, so that's the plan. Then, now these charts super similar, right? There's actually a huge difference versus back here. It's subtle, but it's huge, in my opinion. And that difference is these pullbacks here. You'll see on the candlesticks here. These pullbacks, intraday pullbacks, have been bought. Here, multiple days of this. So that's somebody with, or an entity with a good amount of money coming in and supporting the weakness in the stock. Now, I don't know that for sure. I could be, it could be completely wrong, but that's, typically what you see. It's nothing's 100% guaranteed, but typically what you see. So now let's go to where we got filled here. We got filled right here. I was hoping right around $4 calls. Got those calls filled at $4.08. Those are expiring September 20th. $20 strike price. So that is 87 days to expiration and a 10% in the money call option. Why did I do it like that? Just because of what I just explained, of a way to mitigate that downside volatility. And also, if this can get momentum, this is going to be could potentially be a very good one. So I want to give my positions every opportunity that I can, so that way that they can work. Now something kind of funny, right? So you don't chase. Looking to get filled at $4. It's not getting filled at $4. So then I see it's like 405. Go to 405. Doesn't get filled at 405, so I'm like, all right, we'll go to 408. Boom. Gets filled 408. Like right here. Then 20 minutes later, just crashed. I think those calls got down to 390, something like that. 390. I don't know exactly what the actual absolute lowest was, but around here I was looking. I was like, I'm curious, so it was right around 390. But anyways, really good close. Really good close. Again, so what am I risking? Where am I getting out on this? That's always the very first thing that I try and figure. That's the very first thing I try and figure out. For me personally, I figure my risk out first, and a lot of times I'll figure out the reward or the target price kind of as I go. I have kind of an idea, but I kind of figure out as it goes. It's not like a total, complete science. Little bit of art involved in it, but anyways, okay, so where am I getting out? Below this 21-day EMA, so any close below here, I'm out. Yep, that's the whole plan with Robinhood. Moving on. Alrighty, L3 Harris. Oops. Oh, so price got filled $4.08. The price of those contracts are currently $4.10. Alrighty. L3 Harris. Defense contractor. Same old, nothing's changed. Still positioned here. Cost basis $219.21. Buying here, kept adding. Bounced off the 50. Defense contractor. I've already gone over the fundamentals of this one. And it's actually kind of interesting. So right here this morning, Trump said, he's handing plans to halt military aid to Kiev unless some peace talks happen. So obviously, defense contractor stocks, they're not going to like a report like that. So they sold off, but it was supported decently well. I have no strong opinion on this stock. I actually don't really have strong opinions on any of the positions, really. But this one, even less so. Alrighty. Palantir. Another equity position. The average the cost base is $24.23. Currently $24.56. Nothing's changed. Still in it. Looks good to me. That's still a starter position. I didn't add to it today. I probably should have. But I didn't. I mean, this 50-day moving average is just starting to move up. So there'll be plenty of time. But Palantir is kind of a weird one. It doesn't really trade as I expect it to trade. I've had some good ones. I've had some horrible ones in here. Palantir, we went over the TQs. We'll go to wheat now. This is the last one of my positions. I didn't talk about this last night. Smallest position by far. To the point where if I'm completely and utterly wrong, it doesn't make much difference to the P&L. I mean, obviously it would make a difference, otherwise I wouldn't even be in it, right? You want it to make some difference, but this is the smallest position. Got in it on Thursday. Why did I get in on Thursday? One, I mean, look at this. It seems overdone and oversold. I don't think you guys can see it because the video camera's here. Now, the one caveat I will say about this is when somebody says, oh, it's oversold, or, I mean, it's huge sell-off that's bound, just due for a bounce. It's like, you don't know, nobody knows, right? What... how are you to determine? What do you know? Every single trader on the planet exactly what they're gonna do? Like, no. So I mean, you have no clue. Regardless, it does seem a little overdone. So I got in on Thursday. I did a starter position. I haven't added to it. I haven't done anything to it. There's a couple fundamental reasons as to why. I believe Russia had come out and said that they had a state of emergency for their crop production or something, crop harvest or something along those lines. Crop conditions in the U.S. are deteriorating for wheat, but this is just a week over week change, and I don't know if the change is a huge change, a big enough change for it to matter or not. These are things that I just don't really know. But regardless, they are happening, and we will see. Norway came out today, I believe it was today, and said that they are stockpiling an ungodly amount of grain and wheat. I think it was enough for their entire country, for 5.5 million people, to eat for 3 months. And I would have expected that would have been bullish news, but clearly not. So again, like opinions, it doesn't matter what the opinion is. I mean, this was on huge volume, a down day on huge volume. That's been bought after hours. So my plan here, I'm not stressing about this one again because it's my smallest position far and away. But I think what I'm going to do is anything below 55, I will sell a third of those contracts. And these are not contracts. These are not futures. These are not options in futures. It's getting a little distracted there. These are options in a wheat ETF where the options market is pretty illiquid. I have had success in this in the past. So anyways, pretty illiquid. If you get it right, it's cool. Contracts expiring August 2nd. Average price of 23 cents. They expire 38 days. I don't have the strike price written down, but I'm pretty sure it's $5 strike price. I could be wrong. I picked the most liquid of those. Because again, I mean, with this, you don't have many choices. But I believe it's $5 strike price. I don't have that written down, so I could be wrong. But anyways, expiring August 2nd, that's 38 days. Shorter than I would want, but again, I mean, this is not that liquid of an options market, so gotta do what gotta do on this trade. And moving on, that was exciting. All right, that was it for current positions. Yep, that was it. Now let's move on to some futures trades. Nothing exciting here. I probably made some mistakes. Again, I didn't really think today was going to be that strong of a day, although it didn't surprise me. I just didn't have much conviction that it would be. The first trade that was placed here was at 7:58 in the morning at, and this is Pacific time, 57. It was placed, 57. Yep, like right here, 57. Sold at 59. I actually bought 57.50. Sold 59. That's 6 ticks or $30 a contract. And you love to see it sold, blasted off. I mean, that's crazy. That would have been pretty sweet, but missed it. Whatever, who cares? But not who cares. These are things that I try and learn from and try and figure out. Especially with futures, right? In intraday charts, still figuring out the best situation. But regardless, trade was made money. But again, was it a mistake? Was it not a mistake to hold? I mean, clearly it was a mistake, but I've seen these freaking things go the complete opposite way, especially intraday. So if I have strong conviction that it's going to be a nice trend day, I'll hold them for longer. I didn't have much conviction, although it didn't surprise me. I thought it would. I mean, clearly, I went long NASDAQ here, so clearly I thought it was going to be good, but I just didn't have much conviction it was going to be, pretty big. Okay, so moving on, then we go over to the micros, because then I think, you know what? I should have just held on to these suckers. Maybe let's try with the micros. So we go over to the micros at 950, right here at like 51 or 65. Yeah, 65. 65.25 was the average. Sold at 70, basically 5-point gain. $9.50 per contract. Whatever. I thought, all right, cool. Yep. Took a quick profit, no big deal. Didn't really risk anything. Sold off. Only to continue higher. This was a good place for support. looking back on it now, I should have bought this, or especially after this tail and after this tail, and it was supported. Yep, that's what I should have done. So then we always try and get better, right? So 43-ish would have been pretty good. And then you'd be risking below this 35, 34. Yeah, that's a trade worth taking. And yeah, we'll get better. We'll continue on with the futures trading. 1120, another, oh wait, nope, 1105, and the Dow. Trading Dow, yeah. 1105, where is this? 1105, right here. Average price, 503. So 503, closed it out. 507, 4 ticks. Was that $20? Yep, $20 a contract. You know, again, kept going higher. I really liked this right here, but again, I just didn't have much conviction it was going to be a good day, and for the Dow specifically, it was not. So I like that risk reward here, so I went for it. Definitely not a perfect trade by any means, but that was it for futures. Three separate trades executed there. Something I wanted to talk about emerging markets is, so down here, I don't always pay attention to this, but right around 12 o'clock, 11:56 Pacific time. Oh, jeez, that's annoying to scroll through. $11:56. We start seeing some big buys coming in for emerging market ETF, like really big. I mean, yeah, look at that. And then just continuing. You know, so you're buying calls huge, 25,000 contracts, selling 25,000 puts. That's bullish. Buying 2.5 million shares, buying 5,000 calls, selling puts. Like, who the heck is this? Again, buying 20,000 calls. Again. And then, I mean, even all the way 1207 again. I mean, somebody's just stepping in there. So does that affect anything that I do? Like, no, it doesn't. It just goes into the pile of bullish. That's it. You know, I think, oh yeah, that's bullish. And still have my plan, and that's it. Now let's talk about, real quick, I don't know how I've been talking for. It's probably a long time, so sorry guys. Getting bored here. Cruise stocks, let's go over this real quick. So Carnival Cruise, fantastic earnings this morning. Completely blew it out of the water. Raised guidance. Is it 2025 they said is already, there's already more bookings committed in 2025 than they had their entire year of 2023. Something along those lines. Super awesome. So then I start looking at what are the other cruise ships. So then you could go to Norwegian. What is it? S-O-H. You know, I mean, this looks pretty good, right? Little funky, but I mean, these huge drop-offs because of COVID, man, that's crazy. Boom. COVID. Then Royal Caribbean. And you think, my God, Royal Caribbean, is that an all-time new high? How is that even possible? Didn't they just completely capitulate? Right? I mean, all the other ones they clearly did. Are they recovered? Not even close. How the heck is Royal Caribbean outperforming just, I mean, ridiculous amounts? You know, I don't have like a percentage. I guess I could calculate it, but I don't know what percentage they're outperforming. I mean, it's insane. Outperforming their peers. This is going to be one that could go after. Observations. Moving on. Cool. All right. Let's move on to the newest segment, capitulation and elation. Alrighty, we'll start with capitulation. So let's go to restoration hardware. What the heck is this chart? What is going on here? Never is recovered. 745 to 215. Losing money. Analyze. Restoration hardware. Quarterly. Quarter over quarter change in earnings per share. Negative 389%. Like, damn. The heck? That's crazy. Why? I have no clue. Annually, year over year change. Huge. Cash flow just evaporating. Book value evaporating. Like, do you see this? So book value a share is minus 16. So, I mean, what they have, they're worth nothing. They're worthless. Profit margin year over year minus 250%. Net profit margins minus 250%. Revenues declining, I guess, obviously. Crazy. Now, is this actionable? Maybe. I don't like to short anything in a bull market. That's typically my go-to. Again, just because I play the probabilities. You know, in bull markets, you get surprises to the upside. And in bear markets, you get surprises to the downside. So, will I short this? No, but I'm definitely going to be watching this because, dang, could be a short. Alrighty, moving on. Elation. We got 3. Wow. Going on to Hut Mining. Hut Mining, a Bitcoin mining company, up 17% today, 16 and a half, a little more. And for the week, well, I guess, let's call it since here, 10 days, 13, 14 days ago, from $10 to 15 is a sweet gain. What the heck's going on here? Has Bitcoin been performing that well since June 11th? No. Not even close. Whereas June 11th right here. June 11th, I would say it has trended significantly down. So what the heck's going on? I know there's been some traders buying pretty decent size and some LEAP contracts expiring in 2026. Don't know why, but somebody definitely knows something. Also, on a side note, since we're talking about this real quick, Bitcoin, I just don't see that this was the top. I mean, anything below 50-day moving average is a no-go for me. I just don't, I don't see the elation. Where is the elation in, I guess, although we are in the elation segment, but where is the absolute euphoria, massive FOMO that we've seen in previous bull markets for mining stocks? You know, after the halving of Bitcoin miners, or their revenues are cut in half. Could that play a part? Maybe. It didn't in the last halving, so the heck does it matter now? It shouldn't. That's, you know, Clean Spark. You know, like, what the heck? How can you read that chart? Okay, I'm getting off topic here. Elation. Oh, yeah. Okay, so hut mining, FedEx. You think, what? FedEx? It's crazy. Well, FedEx released earnings today, and I mean, they're up 50% at one point or something? Let's look for the news here. All right, am I completely wrong about the 50%? Here it says 15%. Slightly less, no big deal. No, it's gotta be. I mean, I got an alert that they were up. Oh, maybe it's Rivian. That's where we're going next. Oh, that is where we're going. Okay. I got him confused. No big deal. But still, FedEx blew the earnings out of the water. Obviously surprised Wall Street. So, yeah. I mean, again, bull markets, you get surprises to the upside. Is the economy so freaking awful that FedEx is crushing it? Although they have layoffs, rallies after big cost cuts. But they wonder if the reductions are in the past. There's improvements in Europe amid layoffs. Earnings beat. Oh, and guidance beat. Okay, so there you go. So it was a beat and raise quarter. Shares are going to open, well, I don't know if they're going to, currently, after hours, 291. Now, something interesting to take note, you have a whole gap to fill right here. And where do you fill the gap? 295. What did these get up to? 295. So we'll see if it holds. Regardless, it's bullish. Those things happen, right? In bull markets, you get surprises to the upside. Last but not least, Rivian. Okay. This chart would have been a no-go for me. Not because I thought it looked bad. It looks fine. It's just below a declining 200-day moving average. And that's a no-go for me. So, yeah. I just don't. It's a game of probabilities, right? You know? It's like, boom, you missed this massive one. Well, there's a bajillion that you would have gotten slaughtered from. So, anyways, what's going on with Rivian? What are they up? $12 to almost 19. I saw that was like 50% at one point or something. Yeah, soars 50% in Volkswagen deals. So what the heck's going on there? Volkswagen is investing $50 billion in Rivian. And if it goes well, they'll continue to invest more billions. Exactly what are they investing in? What are they doing? I don't know. I haven't looked into this enough. Rivian retools in quest for first profits. So again, you can't just throw, just because you're throwing money at this, it doesn't really, was it going to change the team that's never been able to turn a profit here? I mean, I don't know, right? The government just, what we just spend $300 million for a bridge that is came apart, and you know what I mean? So just because it's like a 20-foot long bridge or something ridiculous, so just because you're throwing all this money at something doesn't mean you can fix anything. But yeah, sweet for the Rivian shareholders. Also very interesting. You kind of start seeing volume, right? So traders knew. Some people did, anyways. Yeah. And that's it. I'm going to do a separate video. I think this one's gone super long. I'm going to do a separate video for the plan for tomorrow. And that's it. Later. All right.